In this video, you are going to learn how the forex market moves. That is, understanding the market structure. If you are able to understand the market structure, if you are able to understand how the forex market moves, then you will be able to know when to enter a trade and when not to enter a trade, because the market moves in a circle. So in this video, I'm going to walk you through a practical steps on how you can identify how a market moves, a forex market moves, right? So that you will know when to trade and when to stay away from the market. So the forex market has 4 stages, right? There is a way the forex market moves, and it is classified into 4 stages. We have the advancing, we have the distribution, we have the accumulation, and we have the decline. So these 4 stages make up the movement of the forex market. So that is what you are going to learn from this video. Please, my advice to you guys is to make sure that you watch this video from the beginning till the end. Don't skip any. Make sure you watch this video and understand everything that this video is talking about. So now I'm going to show you my screen for you to understand what I'm talking about. Now the first stage of the market is what we call the accumulation stage. Now most of you might have heard the word accumulation. Accumulation means when the market is consolidating, when the market is in a range. That is what we mean by accumulation, right? So sometimes when you open your chart, you will see that the market is in a range, right? The market is making sideways. That is what we mean by accumulation. So in that process, there is absolutely no volatility in the market. There is no liquidity in the market, right? So that is why the buyers and the sellers are just exchanging prices, right? The buyers and the sellers are exchanging prices at that moment. Why? Because the market has no particular direction. It's just going up and down. So if you look at the chart, you see that the market is on a range, right? Market goes up, comes down, goes up, comes down, right? So in this process, we call it the accumulation stage, where the market is ranging in a down trend, right? Because sometimes if the market is in a downtrend, it gets to a point where the market will get to and will start ranging, right? So when a price is ranging at a downtrend, right, it means the market is in an accumulation stage. So the buyers are buying from the low while the sellers are selling from the highs. So this is the highs, this is where the sellers are selling, and this is where the buyers are buying. So whenever the market goes to the resistance level, the sellers enter the market and sell, and when the market comes to the support level, the buyers enter the market and then buy. So the action of the seller and the action of the buyers is what is moving this market in a range, right? That is why whenever the market gets to the resistance level, the sellers push it down to the support level, the buyers now step in and then push it again to the resistance level, and the sellers push it back again to the support level. So in this process, both the buyers and the sellers are in equilibrium. They are fighting head, fighting to know who will actually win, right? So if the market finally breaks out from the accumulation stage, that is when we enter into another stage, right? So when the market breaks out from the accumulation stage, it either goes into advancing stage or declining stage. So these are the things we're going to learn in this video. Now if you watch here, this is what we call an advancing stage, because the market was formerly in a range, that is in an accumulation stage, right? Then what happened? The buyers became stronger than the sellers, and they were able to push the market higher. So that is why the price broke above this resistance level. So it means that the buyers have won the battle. Formerly, both the buyers and the sellers were in a strong battle. struggling for supremacy, right? But finally the buyers became stronger and they were able to push the price up. So that is why the price broke above this resistance level, and that is the beginning of the advancing stage. The advancing stage, in other words, is known as an uptrend, right? So after the accumulation stage, we have what we call the advancing stage. So this is what we mean by the advancing stage, right? Where the price is now making higher high and higher low, higher high and higher low. That is what we mean by the advancing stage. So this is what we call the advancing stage. Let me give you another example again of an advancing stage. This is also an advancing stage, right? So when the market starts going up, it means we have entered into an advancing stage. It means the market has entered into an uptrend. So the buyers are strong in the market and they are pushing the price up. So in this situation, we have more buyers than sellers, because what we have there is a clean uptrend, right? The market is making higher high and higher low. So what you do in this kind of situation is to target the lows, right? The lows, you can use either a trend line or you can use a moving average, so that whenever price comes back to the trend line or a moving average, you take your trade. So if you watch here, you see that we are using a moving average line here as our area of support, right? So you can see that the red line is the 20 EMA, while the blue line is the 50 EMA. So whenever price gets to the middle of the 20 and the 50 EMA, it tends to bounce off from it. So that tells you that we are clearly in an uptrend. So the market has broke above the accumulation stage and we have entered into the advanced stage. So the advanced stage, like I said before, is an uptrend where price is making higher high and higher low. So now when the price gets to the resistance level at the uptrend, another thing that will happen is that the market will now go into what we call the distribution stage. So the distribution stage has to do with a ranging market at the uptrend, right? Because when the market was ranging at a downtrend, we call it the accumulation stage, right? And now the buyers were able to defeat the sellers and they were able to push the price up, and the price broke above the resistance level. And what happened? We enter into the advancing stage, which is the uptrend, where the price is making higher high and higher low. So when the price gets to a resistance level at the uptrend, what happens is the price will now go into another level of range, and this type of range is called the distribution stage, where price is making a range, a sideways at the resistance level. So when you discover price making range at the uptrend, it means we are in the distribution stage. So at that period, the buyers could not push the price any further, right? The sellers step in, and both the sellers and the buyers were now exchanging prices. So there is a price channel where price could not break through, right? So the buyers are buying from the low, which is the support level, while the sellers are selling from the highs, which is the resistance level. So this is example of the distribution stage. You can see that the market went up, right? This was the previous advancing stage where the market was in an uptrend, right? So when the market got to this second stage, the market now started making a range, which tells you that the buyers are no longer active again. They are no longer strong in the market, and the sellers have stepped in. So the buyers and the sellers are now exchanging price, right? That is why when the price comes down to this support level, the buyers push it up, and when the price gets to this resistance level, the seller push it down. So there is an equilibrium, right, between the buyers and the sellers. The buyers and the sellers are exchanging prices, right? So this is what we call the distribution stage. A ranging market at the uptrend is known as the distribution stage. So this is what will be happening until either the buyers or the sellers become superior. So in this process, both the buyers and the sellers are fighting. They are fighting for supremacy, fighting hard to know who will actually take control of the market, right? So you see that the sellers are injecting, they are buying, the buyers are injecting money, they are buying too. So what happened now is the people that has the highest money are the people that will control the market. So for the fact that both the buyers and the sellers have the same amount of money. That is why the market could not break through those levels. So that is why if the market gets to this level, the buyers push it up, and if the market gets to this level, the sellers push it up. So what you do is use a horizontal line to draw two levels, one at the lows and the second one at the highs. So this now forms the support and resistance level, right? So once the price gets to the resistance level, you sell, and when the price gets to the support level, you buy. So this is what will be happening until either the sellers or the buyers take control of the market. So if you watch, you see that at the end the sellers became stronger and they were able to push the price down. So that is why the price broke below this support level. So once the price breaks below the support level, it means the sellers have defeated the buyers. So we enter into what we call the decline stage. So when the price breaks below the support level, we now enter into a downtrend where the price is making lower high and lower low, lower high and lower low. So right now you can clearly see that the sellers are stronger than the buyers. So that is why they were able to push the price to the extent that the price broke below the support level, and that became the beginning of the decline stage. So after a ranging market at the uptrend, which is known as the distribution stage, the sellers push the price and the price break below the support level, and what happened, we entered into a new level known as the decline stage. So like I said before, the decline stage is a downtrend, right, where the price is making lower high and lower low. So let me give you an example of how a decline stage looks like. So this is how a decline stage looks like, right? You can clearly see that the sellers are in charge of this market. They are pushing the price down. So that is why the price is now making lower high and lower low, right? So the sellers are more active in this market because they were able to push the price, and the price broke below the support level when it was at the distribution stage. So this stage is what we call the decline stage, where the sellers are pushing the price down. So in this stage, you know that there's more sellers than buyers. So if you are buying at this level, you are wasting your time because you're going to lose so much, right? So that is why I keep saying trade in the direction of the trend. So you clearly see that this is what we call the decline stage, where the sellers are pushing the price down, right? So the buyers are not active at all. So the sellers are the ones pushing the price down. So if you are to trade this type of market, or you identify this type of market, the best thing you can do is to trade along with the trend, join the sellers and push the price down. Because if you try to trade against the trend, you might get hurt, right? Because the general movement of the market is downtrend. So you are meant to trade in the direction of the trend. So this is what we call the decline stage, where the sellers are pushing the price, where the price is making a downtrend, where the price is making lower high and lower low. So we call it the decline stage, right? So the price will now move again to a support level, right? So when the price gets to a support level, what happens again? We now enter back to our accumulation stage, where the price start making another range at the downtrend. So this is an example of how it looks like. So this is example of how it looks like. I clearly see that the price now went down, right? Went down, and when the price got to the support level, the price started making another accumulation stage. So we now enter into the accumulation stage where we came out from. So this is how the market moves, the rotational movement of the market. So you can clearly see now the market is back to the accumulation stage, where the buyers and the sellers are now exchanging prices. So that is why you see when the price comes to the support level, the buyer step in and push it up, and when price gets to the resistance level, the seller step in and push it down. So you can clearly see that the buyers and the sellers are pushing the price up and down. So in this process, the price has no directional movement, right? So what you do is you simply use a horizontal line to map the highs and the lows where the price could not break through, right? So that now acts as an area of value where you are expected to place your trade. So whenever the price gets to the resistance level, you place a sell trade, and whenever the price gets to the support level, you place a buy trade. So this is what you are going to be doing until either the buyers or the sellers are able to break the level, right? Either the seller or the buyer are able to break the level. So it depends. If the price breaks above the resistance level, an uptrend begins, but if the price breaks below the support level, a downtrend begins. So at this process, the buyers and the sellers are exchanging prices. They are fighting for supremacy, waiting to know who will be the leader. So it depends on the distance of this range. If the range is very wide, then you can trade the range, but if the range is very tight, right, you can ignore it and wait for a breakout, right? So now this is another thing you need to understand. Sometimes there can be another range inside a range, right? There can be another range inside a range. So this is an example of what I'm talking about. There can be another range inside a range, right? For instance, this is a ranging market. The range is wide, right? Maybe 50 or 70 pips, but inside that range there can still be another range. So this is the example of what I'm talking about. So you are extremely advised not to trade the middle range, right? Stay away from the range in the middle of a range, right? Because the price can likely break above it, right? Because if the price is now making another range inside this range and you decide to trade this range, or you decide to draw another support and resistance level, maybe you draw resistance line here and you draw support line here, so you are waiting for a price to come here for you to buy and price comes here for you to sell, right? So have it at the back of your mind that this is what we call the minor support and resistance level, which you know is not strong, right? This is the major support and resistance level, this is the major resistance level, and this is the major support level. So these are the levels you should be looking at, this support level and this resistance level. So ignore this small consolidation here, ignore it, right? So this is what you should be looking at. So when the price gets to this resistance level, you sell. If the price gets to this support level, you buy. But ignore this, because if you decide to trade this range, you might get hurt, because if you place a sell trade somewhere here, where will be your stop loss? Your stop loss is likely to be above this resistance level, which is too far, right? So your risk reward is going to be bad. So that is why you need to wait for the price to get to the major resistance level or the major support level, so that your stop loss will be above this major resistance level and your stop loss can be below this major support level, so that you can trade the range bound, right? So like I said before, the market moves in a cycle, it rotates, right? It has stages, right? So it depends on the stages that you are able to meet. So if you meet when the market is in an uptrend, the advice I have for you is to trade in the direction of the trend. Like example, let me give you an example again for you to understand what I'm saying. So if you open your chart and you see something like this, where the price is making higher high and higher low, higher high and higher low, higher high and higher low, you don't need a prophet to tell you that the price is clearly in an uptrend and you are meant to trade in the direction of the trend. So if you open your chart and you see this type of market, just have it at the back of your mind that you are at the advancing stage, right? You are clearly at the advancing stage. So this is what we call market structure. You need to understand market structure. It is very important. So once you see this type of chart, just have it at the back of your mind that you are at the advancing stage, meaning that the market is clearly in an uptrend because the price is making higher high and higher low. So what you simply do is you use your trend line to plot the lows. So these are the lows, this is the low, this is the low, this is the low. So you simply use a trend line and draw it connecting the lows, right? So once you're able to connect the lows, what you're waiting is to wait for a price to make a retracement to the lows for you to place your buy trade. Or you can simply use a moving average. You can either use a 20 exponential moving average, or you can use the 50 exponential moving average, right? So that whenever price gets to the moving average, you now place your buy trade, right? But remember that sometimes the price might not respect the moving average, just like what is happening here. You can clearly see that the price is not respecting the moving average, right? You can see that the price is breaking through the moving average. So at this stage, what you are expected to use is the trend line to support with the moving average. because you can clearly see that the price is not respecting the moving average. So you see that the price breaks below the moving average, went up again, breaks below the moving average, went up again, breaks below the moving average. So the best thing you can do is to use a trend line and use a trend line and connect the lows, so that when the price makes a retracement to the trend line, you simply place your buy trade. So once you identify this type of chart, just have it at the back of your mind that this is an advancing stage in market structure. This is an advancing stage, and like I say, in an advancing stage, it means that the market is clearly in an uptrend where it is making higher high and higher low. So the best thing you can do is to trade in the direction of the trend. So if you open your chart again and you see something like this, right, you see something like this, this clearly tells you that the market is in a decline stage. So this is clearly a downtrend, telling you that the market structure is down, the market is in a decline stage. So what you are expected to do is to trade along with the trend. So what is the trend? The trend is down, right? The market is making lower high and lower low, lower high and lower low, lower high and lower low. So your best advice you need is to trade in the direction of the trend. So you can still plot your trend line and connect the highs, right? These are the highs. So use your trend line and connect the highs. So the highs will now act as a resistance level for you, so that whenever price makes a pullback to the highs, you place your sell trade. Whenever price makes a pullback to the highs, you place your sell trade. And also you can use the moving average, like the 20 or the 50 exponential moving average. But I will advise you not to rely only on the moving average. You can include trend line to support the moving average, because sometimes price might not respect the moving average. That is when you need a trend line. So if you see that sometimes price is breaking, like here price broke above the moving average before it collapsed down, again price broke above the moving average before it collapsed down. So this is where price respected the moving average. So at this point you need a trend line to confirm that the price is still respecting the market structure. So you can clearly see that the market clearly in a downtrend. The market is clearly in a downtrend. So you simply use your trend line and connect the highs, right? So that when price makes a pullback to the trend line, you place your sell trade. So this is what we call a decline stage, where price is clearly in a downtrend. So when you see that type of market, know that you are expected to sell. So but if you see this type of market where the price is making highs and low, right, in a range, so it means that the market is clearly in an accumulation stage, depending on the level where you saw the market. If the market is in a downtrend and started making this range, it means that you are in the accumulation stage. So it's likely that the buyers might be being charged very soon. So what you do at that moment is to trade the range. When the price get to the resistance level, you sell, and when price gets to the support level, you buy. So these are what you'll be doing until the buyers or the sellers are able to break the level. So if the buyers are the ones that broke this level, right, then you know that the buyers have taken charge. But if the sellers breaks the support level, it means that the sellers have taken charge. So at the moment you should trade the range until there is a breakout, right? So like I advised you before, when the range is too tight, right, like a build up, please don't trade the range. Just wait for a breakout, right? You only trade the range when there's a distance, when the range is wide. Like if you watch here, you see that the range is very wide. You can see the wideness of the range. So if you make a calculation, you see that the range is up to 100 or 90 pips, right? If you make the calculation from here to here, you see that the range is up to 90 or 100 pips. So you only trade the range when the range is wide. But once the range is very very small, right? When it's very small, please ignore it. Wait for breakout. If the range is in a tight consolidation, ignore the range and wait for a breakout. So you only trade the range when the range is it expands, right? The space, enough space for you. So that is when you can trade the range. The essence of this is for you to get a better pip, right? So that once you buy from here, you know that before the price gets to this resistance level, you cash at least 40 or 50 pips. And if the price gets to this resistance level and you sell before it gets to this support level, you will cash at least 40 or 50 pips. So that is why I said, if you want to trade the range bound market, make sure that there's a distance, that the range bound has space, right? Make the calculation before you can trade it. So this is how you identify a market structure. This is how the forex market moves. It moves in a cycle, right? We have the accumulation stage, we have the advancing stage, we have the decline stage, and then we have the distribution stage. That is what we call the 4 stages of the market structure. So both the forex market, crypto, commodity, everything called market has a movement. So that is why I said these 4 stages is how the market moves, from accumulation stage to advancing stage, from advancing stage to distribution stage, from distribution stage to decline stage, and from decline stage back to the accumulation stage. So you can see the rotational movement of the market. So this is how the market moves. So if you understand market structure very well, you will know when to place your trade and when not to place your trade. So if the market is in an uptrend, you are expected to buy. If the market is in a downtrend, you are expected to sell. But if the market is in a range, then you need to buy low and sell high. So this is how you identify the market structure. So ladies and gentlemen, that is all I have for you in today's video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be notified whenever I publish new content. I will see you again in my next update. Bye.